Motivation is what gets you started. Habit is what keeps you going. Jim Ryan. My friends, each and every day, 10 to 15 minutes, never miss it. Do I miss it? I've missed it a couple of times when I was literally almost in the hospital with very bad pneumonia, I remember. And I think it was actually as a result of COVID. I got that Delta variety. But anyway, enough about me. Let's talk about our success. Hey, looking at these charts today, wild. We've got a lot to talk about. We see stocks starting the year off with a dive. You can look back and see here on the half-day chart Friday, things started moving down. They moved down in the morning and the afternoon, not quite as much as where things dipped in the morning. Then we get to Tuesday, this shortened trading week, thanks to the New Year's holiday. And you can see all of the increasing volume from the morning, things dipping even lower. Now, again, not all that big on the S&P 500, but down 0.56%, forming the first day of the latest two-day candle, a red down candle where the wick is touching the weekly trend line. Got a wick pushing through it later in the day on the half-day chart, the afternoon. And you can see that, and again, it's just the first day of a shortened trading week, but as you look at things, you can see, okay, volume for the first day, and you can see us, penetrating. We're still part of the little candle is touching the line. It is a green candle. Remember, these are Heikin Ashi candlesticks, so they're calculated differently. If you haven't taken that training, I'll put the Heikin Ashi training at the end of today's video for those who want to truly understand what Heikin Ashi average pace Japanese candlesticks are all about and the reason that we use them. Great training. You will love it. If you've not taken it in a while, take it again. Look at all the volume. First day of the latest two-day candle. Boom. That's a good bit of volume. Is the market crashing? Can't say that. One down day, still got a little green candle there, but it is down, is dipping. And of course, on the two-day chart, we haven't seen it since this up move actually turning red on us. So it's just a little warning light. It's going off on the dash. We're paying attention to it. What about the NASDAQ 100 now? It is in a little bit different territory. You can see where the two-day candle is trying to penetrate the weekly trend line. Half day slashed through it in the morning, then in the afternoon, and we have a red doji forming below the prior trend line. So bigger warning light, maybe a couple of three warning lights going off there. So we will pay attention. Now, in this latest run-up, we've seen 4 days of down movement. You can see that on two-day candles. And again, that's where the up movement slacked off. We still had a green. Now again, this can turn green. We'll see how the week continues to move, but we're paying close attention after we've done so well with this run up. And if you went ahead and decided to pull your trade today, you can do that. We'll see how smart that decision was or wasn't. What about the bond market? Look at 20-year U.S. government bonds. We see them slacking off 0.58%, again, pulling through that weekly trend line. Now, again, could go up the rest of the week. Look at that two-day candle, first day of the latest two-day candle heading down, and you can see for this entire run-up, we haven't had a red candle on that two-day chart. We've had some red half-day candles, but again, no red two-day candles. We had things go real flat here. They're the 11th and 12th of December. Then they took off again. So you can see where the red candle in the afternoon is pushing through the weekly trend line on the half-day chart. What about gold? Now, gold is interesting. We've talked about where gold has topped before. And gold, booted up. And then the candle body just sort of stopped right here. Gold down 0.24%, hanging there on the two-day chart after trying to push through, and we look at where things have gone on the half-day chart. That was the two-day. We've seen where things popped above and then have rolled back through. But the big one we're paying attention to, and what we set this on, was the weekly chart. So we will pay attention to gold and see if it's rolling over, if we can do a short trade in gold. If it pulls back, starts to head down, it could just be digesting the prior gains, getting ready to just get enough energy to push through this past ceiling. Now, the biggie, Bitcoin. Look at it jamming up 5.62%. Of course, we had a sketchy week last week, but you can see 2-day chart touched it. That is the wick, but never pushed through the weekly trend line and bounding up today. Look at Bitcoin in the morning, pulling back some in the afternoon. And again, we saw where things pushed down, trying to push through, did push through at the end of the day on Friday, and then things popping up on Tuesday. Hope I didn't use Monday at all through here because, of course, markets were closed on Monday. Used to saying that to start the week off, but Tuesday is the right word. So Bitcoin a-booming up. Now, not what we've seen before. We saw where things have popped up over the last year and then rolled back over. We saw it pop up, looked like it might roll over and took off. Here, again, sideways might roll over, particularly weakening this last week, and then boom, starting the year off with a bang. Go Bitcoin, go. Hope that you are in that practice trade and seeing things move in the green for you. That's where we are, folks. So appreciate you being with us. Always love to hear from you. CW@chartingwealth.com is where you send your questions. Please be sure to subscribe and like our videos. And if you aren't receiving the daily review along with the special training we put in it every day, just go to chartingwealth.com, sign up for free. That list is never spammed, never shared. God bless. All the best from the whole team at Charting Wealth World Headquarters.